Good morning, trading world. This is my pre-market outlook for February 27, 2024. The title of this morning's outlook is Get into the Swing of Things. And this is based on a lot of information that I was talking about yesterday, which is the basis of how I look at technical analysis. Yesterday I kind of gave a basis for how I view things. The basic view is about swing highs and swing lows. Yesterday I had talked about how we may be putting in a swing low on the 4-hour chart time frame. Further evidence is in hand. I have a shaky buy signal on the 4-hour chart time frame. So I will be on the buy side of dips today. The reason I say shaky is because at the same time I have a sell signal on the daily chart time frame. I am confident in the buy signal because of where we are in the cycle on both of these time frames. The 4-hour time frame is bottoming. However, the daily is just at or after peaking, which means I won't be holding longs long at all. In fact, this bounce should lead almost directly into a short position. However, we have to keep in mind that things or setups on the daily chart usually take a lot more time to play out, usually 6 to 8 weeks. So based on the setup, I see, excuse me, we could have another day and a half of this bounce before fading or rolling over again. So based on what I explained yesterday, we are set up to make a quick swing high on the 4-hour chart that may or may not violate the previous swing high. That's going to be the question. That's where I'm going to have my eyes on about getting ready to put on or take off any positions. Because if I'm able to get long today, a good bit of that is going to be based on the 4-hour chart and getting back into that overbought area on the 4-hour chart, which shouldn't take long. Like I say, I'll probably see another day and a half of pushing up on the 4-hour chart. So with that, let's bring up the intraday levels to kind of show or map out the day today. Alright, now that I have the intraday levels up on the chart and in place, some things that we need to be aware of today. We do have a durable goods report at 8:30, which could cause or reset the push up that we've had pre-market so far. So that could possibly give us something like this before the open kind of start that march over, giving us a swing low. And as long as we stay above this 50.75, bulls are still in control. So I'm going to look for that swing high to continue to make way on the bigger time frame, even with the pushes back down here. But we're going to look for those bigger pushes up, and then maybe later in the day After lunch or during lunch, we're going to have another possibly a half-hearted fade that may see us push back down and kind of wallow sideways, trying to get back up. And possibly another fade overnight, but it could possibly push us low. But then Wednesday, I could see us, if we hold up overnight, then I'm definitely going to be looking for a deep fade Wednesday during the day. But at some point, we're going to get some kind of restart. So, like I say, I see maybe a day and a half of this bounce, trying to hold together, push up, and then a pullback that kind of gets us to a level where we start another swing low on the hourly and the 4 hour, going into Thursday, Friday. But these are the levels for the day. There are some levels in between here where I'm going to be looking for reactionary entry points, where when I say reaction, all I'm hoping for is possibly a bounce of at least 2 points, a reaction that could kind of snowball into more. But the only thing that I expect off of these points are just reactions of at least the 2 points to kind of give me a chance to get in position. And if it takes off from there, good. If it doesn't, a chance to break even, get 2 points, and get out. And those points are going to be the 50.83 area. That's the first reactionary bounce. The 50.77 area is the next reactionary bounce. And the 50.83, 50.84 area is going to be huge. I'm expecting a decent reaction off of that area kind of early. That may be where that durable goods kind of sinks us back to, and we get to push up off of it. Let's see, 50.83, 84, 50.77. I don't see us drifting down to the 50.51 area, but it is quite possible. That's the last reactionary bounce area that I have, is that 50.51 area. And these are all places that I'm going to look for the dips to end up at and give me somewhat of a reactionary bounce to kind of get in position at. So that's what we're looking at today. A few things to keep in mind on this bounce is that the daily and weekly cycle are in a falling phase. I expect the daily cycle to have a swing low between February 28th and March 8th. So this bounce is definitely an opportunity to get short, but don't forget what I said about the daily. It takes a lot longer for things to play out in this daily time frame, usually 6 to 8 weeks. So you have to be careful and give yourself plenty of time. With that, I always like to end the video making you remember your most important job as a trader is to protect the capital you already have. You do this by knowing and understanding the risks you have or face in each position and in the current market conditions. We manage that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's make it a great one.